In today's video, we're going to discuss how I'm getting stronger during this recent down market with Yieldmax, especially since I'm using around 50% margin leverage. Okay, we're still outperforming and we're still getting increased dividends for the year. Okay, we're still growing our income. Our estimated income now is at 700,000. Okay, over 700,000 per year in dividends. As I said, we're getting stronger. Okay, we're still outperforming the major indexes. We're down only 1.5% for the year. The S&P is down 3%. The Nasdaq's down 8%, and the Russell's down almost 8% as well. So we're living financially free out of our brokerage accounts using Yieldmax and margin. If you need help doing the same, email me for my e-guides at akintodd48@gmail.com. We use margin leverage here at this channel, as you know, and we have around 377,000 in margin debt, but I'm not worried about this debt because my dividends of over 700,000 per year will pay back that margin debt in less than 1 year. And I'm also not worried about the margin interest because I've negotiated it down twice. Many of my clients who bought my e-guides did the same thing. All right, so even with all this margin leverage, even with being down over 10% in the Nasdaq now, and the Russell's almost down 20% now, even with the indexes being down like this and being in over 300,000 of margin debt, we're still outperforming the major indexes. All right, I have 5 major ways that I've been outperforming during this down market, okay, and I've gotten stronger in the process. And the first way has been with Defiance, of course. Defiance has low maintenance, all right, so QQQY is the Nasdaq, all right, it is the index, and it has low maintenance, okay? So this is what's been preserving all of my equity during the downturn, all right? So for every $1 you put in your account, as I always say, you get $4 of purchasing power. I'm just using a fraction of this over 1 million in purchasing power to get ahead, okay? And then my dividends pay that back at the end of the year, but you have to keep high available withdrawal in order to do this, okay? And it's very important that I pound the table on this point because many people who use margin get caught in down markets. They don't buy dividend paying funds or index related funds, and they also have high maintenance. And so we're buying low maintenance names that are tied to the indexes like Defiance, and it's preserving all of my equity in the process. We can withstand over 20% correction at this point and still not receive a margin call thanks to our low maintenance names. And we also have put options on, of course. We always keep our insurance on. I only rely on these options in the event of a market crash, but in the meantime, I rely on my low maintenance names that are indexed like Defiance. And again, 30% maintenance means that it's preserving most of my equity. If you need help understanding maintenance, that's in my volume 3 e-guide. All right, I also like Defiance because it falls less on down days. Okay, I've been pounding the table once again on Defiance, telling you all that it falls less on down days. And even on an up day on Friday, it was up 1.4%. Okay, you can go check that if you want. I don't have the stats right now because I'm doing this video on a Sunday, but it was up 1.4% on Friday, and the indexes themselves were up about 0.5% on Friday. Okay, 0.7 as you see above. The Nasdaq was up 0.7% on Friday. Defiance was up 1.4%, but on down days, it's down less than the indexes usually, okay? And also in down markets, Defiance can raise its dividends because it sells put options, okay? And when markets go down, those put options are worth more money, so you get higher premiums and you get higher dividends. I think this is why we're at 741,000. I mean, I wasn't expecting that. I thought my dividends were around 600,000 or 700,000 lately, but over the weekend we got this jump, so we're at 741. And I think, again, that's thanks in part to Defiance because they can raise their dividends in a down market. So you have to have a combination of Defiance and Yieldmax and Cornerstone because Cornerstone also is moving down less than the market on down days. Yes, it had a substantial drop recently, as you can see by this chart, but it was moving upward, left to right in a beautiful fashion before. We had 37% premiums at one point. So every time you get this 20% dividend in Cornerstone every month, it drips it down at the NAV. And now that we've come down in Cornerstone because it had its N2 filing, which we alerted you of in Discord. So when you buy my e-guides, you get free access to Discord for life, where we alert you of the Cornerstone rights offering announcement. Okay, so not only do we alert you of the Cornerstone rights offering announcement here in Discord, but we alert you of the N2 filing here in Discord. All right, so we're all able to sell after hours had you got that N2 filing. Okay? Make sure you play Cornerstone properly around its premium thresholds. Okay, I've been pounding the table on Cornerstone as well. Okay, I've been making videos for years saying, hey, Cornerstone is a great fund. It moves upper, left, to right, and it's indexed. Okay, it's a 4-star fund on Morningstar. Okay, and it also gives you those drips at the NAV, okay? So you're getting 20% gains and we were getting 33% gains, 37% gains. In 2021, I got 45% gains. So we're just getting 20% gains now every month on top of our 20% dividend. So this is why Cornerstone is so great. But again, you have to play it properly around those premium thresholds, okay? If you need help playing Cornerstone, that's in my volume 4 e-guide. And again, when you buy my e-guides, you get free access to Discord for life, where we alert you of the Cornerstone rights offering announcement. Not every broker has the same maintenance or that special NAV drip for for Cornerstone. So please ask your broker or consult the members in our Discord if you need more help with your brokerage account. All right, so number 3, this is how we've been getting stronger during a bear market, okay, using Yieldmax and margin. We've been selling options, okay? I sell my options, they lower my margin, they lower my risk, and they lower my volatility. All right, so I've been selling options on Bitcoin, I've been selling options on some Yieldmax names, some Defiance names, and other index names, and they lowered my margin by about 100,000. 100,000 of margin debt reduction is nothing to sneeze at. That saves me a lot of money and margin interest every year, and it takes away a lot of my leverage once again because these are low volatility names, okay? So not only are these sold options lowering my margin, but they're also lowering my volatility and they lower my risk because when you receive these premiums, they lower your cost basis. Selling options is the safest way to get ahead in the market. Go look at Warren Buffett and see how he gets ahead with Coca-Cola. He sells put options on Coca-Cola. If you need help selling options like I do, that's in my Volume 6 e-guide. And if you need help insuring your portfolio with options like I do, that's in my Volume 5 e-guide. All right, so we're getting stronger in this down market by selling options, by buying put options, and we also use our short income ETFs like Tesla. You pair Tesla with Crash, okay? You pair Coney with Fiat, and we've been neutralizing those losses during a down market, okay? So we've been really weathering the storm here. We've been outperforming the indexes thanks to those hedges, thanks to those options we sell, and also staples have been up huge, okay? I keep pounding the table on staples, okay? Not only staples, not only Coca-Cola. I told you last video that we sold out of Coca-Cola at the highs, but other staples within the staple sector have been going crazy. Hershey's was up 3, Kraft Heinz was up 4, Smucker's was up 5, Brown-Forman up 4, Ford was up 3, but that's not a staples name, that's consumer cyclical. That's going to help with the Trump tariffs. Colgate up 3.5, Campbell's up 5. I mean, you had Lockheed Martin and other aerospace and defense names also be up huge. Utilities, NextEra Energy 4% was up huge. So you have to be in these other names, okay? This has just been a sector rotation away from tech to the other 5 cheaper sectors of the S&P, like I've been saying all year. I've been saying this for almost 2 years now, and this is how we've been getting ahead, okay? And we've gotten even stronger. Our dividends are over 700,000. And we're still outperforming the major indexes. We're down only 1% or so for the year. All right, so if you need more help doing what I'm doing, email me for my e-guides at akintodd48@gmail.com. This is how we're getting stronger during a bear market using Yieldmax and margin. You can too. Anyone can use margin, okay? It doesn't require any kind of background check or credit check. Anyone can get this, and it's the best way to get ahead, in my opinion, since there's no real check needed to get margin loans. And this is how you really leverage up because you can use the low maintenance in your account to get much further, and then the dividends just pay that back, and eventually you get to a point where your dividends snowball, and then whatever margin leverage you use, there's no risk to it because your dividends pay it back so fast, okay? Call me anytime you need help doing this. Just text me first and we'll set up a time after that to talk. Again, Discord and my phone number come free for life when you buy my e-guides. All right, I hope you enjoyed this video, everyone. Please click like or subscribe if you did, and I'll talk to you soon. Thanks.